Most buyers in Sacramento and Placer County are out here grinding through a high rate market, accepting that 6.5%, 7%, whatever today's number is, it's just the reality of buying right now. What they don't know is that some homes in this area still have interest rates in the 2s and 3s attached to them. And if you know how to find them, you can step into one of those loans instead of starting fresh at today's rates. I'm Helen Reed, a realtor serving Sacramento and Placer County. I'm part of a team with deep expertise in assumable loan transactions on both the buy side and the sell side. And we have a network of lenders with specific tools to help buyers bridge the financial gap that comes with these purchases. It's an area where we have real knowledge, real access, and the resources to navigate it. So let's get into it. An assumable loan is exactly what it sounds like. Instead of taking out a new mortgage, you take over the seller's existing one, their interest rate, their remaining balance, their loan terms. So if they locked in at 3.25% in 2021 and you assume that loan today, you're carrying a 3.25% rate forward. You're not refinancing. You're not negotiating with a lender for a new rate. You're inheriting theirs. The math on this is significant. Take a $400,000 loan balance. At 3.25%, your principal and interest payment is roughly $1,741 a month. At 6.75%, that same balance runs about $2,594 a month. That's a difference of over $850 every single month, more than $10,000 a year. Now, not every loan can be assumed. FHA loans are assumable with lender approval, and they're the most common type you're going to encounter in this market. VA loans are also assumable, and here's something people miss. Any qualified buyer can assume a VA loan, not just veterans. USDA loans are assumable, but agricultural-backed and rare in this market. Conventional loans, which make up the majority of the market, are generally not assumable. They include a due on sale clause that requires the full balance to be paid when the home sells. So the homes we're targeting are those purchased with FHA or VA financing during the low rate years of 2020 through 2022. The biggest challenge with assumable loans isn't the paperwork, it's the inventory. You're not shopping the whole market, you're shopping a specific subset of homes. And that pool is narrower than a traditional search. These opportunities do come up across the entire Sacramento and Placer County area. I see them in almost every search I run, but at any given time, there may only be 2 or 3 available, and they move fast. If you have a very specific wish list and zero flexibility, this strategy is harder to execute. But if you're focused on getting the lowest possible monthly payment, or you're an investor building a rental portfolio where cash flow is everything, this is absolutely worth pursuing. The second thing buyers need to understand is the equity gap. When you assume a loan, you're taking over the remaining balance, not the original amount. If the seller bought in 2021 and their home has appreciated, the gap between what they owe and what you're paying can be significant. So say the home is priced at $550,000 and the loan balance is $340,000. You need to cover that $210,000 beyond the loan, typically through a combination of a down payment and a second loan. The lenders I work with have specific products designed for exactly the situation to help buyers bridge that gap without losing the rate advantage in the process. For sellers, if you bought between 2020 and 2022 with an FHA or VA loan, your interest rate is a marketing asset. A buyer who understands the monthly payment difference is often willing to pay more for your home because even at a higher price, their payment still beats everything else on the market today. VA loan sellers specifically, your loan can be assumed by a non-veteran buyer, but only if you're willing to leave your entitlement with the property. So before you make that decision, we can pull your certificate of eligibility and check whether you have remaining entitlement that would still allow you to take out a VA loan on your next home purchase. It's a quick check that could completely change the calculus. The assumption process involves full lender approval and buyer qualification, credit, income, debt to income ratio. VA assumptions in particular can take 45 to 90 days or more. So timeline management is critical from day one. If you want to explore assumable loan opportunities in Sacramento and Placer County, whether you're a buyer, a seller, or an investor, reach out to me directly. I have access to current assumable listings in the area and the lender relationships to help you run the full numbers. The link to reach me is in the description. Let's talk.